My keenness on multiple time frame analysis arose out of the simple proposition that if you can throw the odds in your favour by judging the position of, for example, the daily bar chart, judging the structures and the pressures and the forces at work on the daily bar chart, whether it be a well-established trend supported by continuation patterns driving the market up or down, if you can throw the odds in your favour just by looking at one chart, how much more can you throw the odds in your favour if you don't just look at the last 3 months of daily bar chart, like this? Say this is the last 3 months of the daily bar chart, whereby you have a completed triple bottom. Why not look even further back to see where this triple bottom lies in the longer context of a weekly chart? Is it a situation like this, whereby the triple bottom is taking place at a long-established level where the market bounced before? Here. That throws enormous understanding into the nature of this triple bottom by looking to seeing that the market had bounced there once before, by looking further back. You can only look further back by using weekly bars, which allows you to put more price action history onto the graph. And if that helps to know that in fact the market had bounced from X once before, how much more would it help to find out that what the bigger picture? So let's start with the daily picture, which is a triple bottom just completed, and we found out recently that that triple bottom was in fact a level where the market had bounced before. How much more interesting to find out that the long-term chart is in fact a long-standing bull market, and this is potentially a continuation triangle. And we've broken this diagonal here. So starting from the daily chart, the weekly chart and the monthly chart, the daily chart is a completed triple bottom. The weekly chart shows that that triple bottom is happening at a level where the market's bounced from before, and the monthly chart shows that it's a completed triangle that from a falling diagonal taken place perhaps 10 years before. That's what I mean by multiple time frame analysis, whereby the short, the medium and the long term are all pushing in the same direction, giving a very powerful view on where the market's going to go next. Now, of course, there will be situations when the short, medium and long term are not all pushing in the same direction, but they might be fighting against each other. There's a long downtrend. This is a breakthrough of that downtrend, but the breakthrough of the downtrend has led to a short-term top, so that the daily chart is bearish, the weekly chart is bullish, and the monthly chart is bearish. They're all contradictory, leading to a stalemate in terms of the forces at work on the market. No easy trade.